Big hour coming up. We are roughly a minute and a half to the closing bell. To get us there, we're going to introduce you to Sam Stovall, CFRA Chief Investment Strategist. No introduction. He's a returning player here. Matthew Luzzetti is also Deutsche Bank Chief U.S. Economist. He's coming back for another appearance with us. And as we take a look at where we're headed, these markets could settle to the upside. Let's see what we got going here. The Dow's going to be up about 74 points. The S&P 500, as Alexa said, in record territory, it is up about 10 points. The NASDAQ just, it's fighting between going positive and falling slightly negative. One thing we're on the lookout for, we're going to keep an eye on Tesla. Those shares are the top three trending on the Yahoo Finance platform right now. And Tesla shares are up roughly 2% today. We're going to get earnings from Tesla after the closing bell. So keep your eyes on that. In the Dow today, some of the losers in the Dow might surprise you a little bit, but Amgen is off by about 1%. United Healthcare down by 1%. Nike is off by almost 1%. Some of the gainers today, however, Dow Inc., the chemical company, last week talking about the demand for plastic products is exceeding the supply. So that's getting a boost today. Shares of Dow up 3.1%. And then finally, Boeing. Saw some sell-off in Boeing, but today they're turning it around. There's the closing bell.
All right. We're waiting those earnings numbers from Tesla. Once they hit, we will bring them to you. Let's get to our panel now. And Sam, I'm going to start with you. This is a big week for big tech. We're going to hear from a number of companies, including Apple, Alphabet, Amazon, Facebook. Do you think it might be time for investors to take another look at the mega caps and start rotating out of value and out of the reopening trade and back into these tech names?
Well, Alexis, we've already been seeing some rotation into the tech sector on a rolling 200-day relative strength. What we're finding is that technology is among the four best performing sectors. In terms of earnings, with the market expected to see about a 72% year-on-year gain in the second quarter, the expectations are less for technology, up about 33%. So with the bar set low, I think that there is opportunity for tech to exceed current expectations.
One thing that a lot of investors try to do, Matthew, is don't fight the Fed, but don't fight the trends either. And the dramatic growth we've seen economically, GDP growing over the last couple of quarters, you folk are still saying we're going to keep growing, but you see it slowing down. As an investor, how quickly should I start paying attention to the slowdown that you see coming?
Sure. Thanks so much for having me. And we'll get an update on Q2 growth later this week. We think Q2 will grow at 7.9%. That is down from where we thought just a month or two ago. So we have seen some ratcheting down of growth expectations. But we're not on the side of thinking that you're seeing a very sharp growth slowdown. We think the consumer will remain solid. We think services spending for the consumer remains solid. And this year, we think that you're going to see growth of 7.5%, which is above where the Fed expected to be as of the June FOMC meeting. So there are no doubt growth concerns out there. There are no doubt concerns, I think, about the Delta variant spilling over into economic activity over the coming months. But at this point, we're viewing that as a downside risk. We really do have a baseline, still a very robust growth outlook, at least through the remainder of this year.
Well, Sam, I'll let you weigh in on that. What's your outlook there at CFRA for growth? We've talked to a lot of strategists who believe we're at peak growth right now. We're at peak inflation right now. Where do you stand on both of those?
Well, I would agree that we're expecting to see a very strong second quarter, obviously because comparisons were so easy compared with 2020. And so the peak growth, we're expecting 6.2% for the entire year, 2021, but then also pretty hefty 4.5% growth for 2022. Granted, we are on the peak quarter in terms of earnings, and that's starting with the second quarter's gain of about 23%. That'll put us on the leeward side of this earnings cycle. But still, I believe that with interest rates remaining moderate, our expectation is second quarter likely will be the peak in terms of inflation, and it'll be coming down gradually, not a spike downward the way we've been seeing a spike upward.
Matthew, I want to pick up on what Sam just said about a gradual deceleration with inflation, because you too are calling for something similar to that. A lot of us make our choices on investing and in the asset classes in which we invest, sometimes based on inflation. What can you tell investors as to what to expect over the next year?
Sure. I think it has been at the epicenter of everything that we're thinking about in global macro, certainly within the bond market and interest rates. And we do have a baseline view that the rise we've seen is a transitory one. It's been relatively narrowly focused on autos and those reopening sectors so far. And as we get past that, we're seeing some evidence of some of those pressures coming off. There's private estimates of used car prices, which have actually turned negative over the past 2 months. We saw the very sharp rise in lumber prices has absolutely collapsed. And so there has been some evidence of this transitory story playing out already. But we do think that there are upside risks there, whether or not this gets embedded in inflation expectations, whether or not we have a new inflation psychology for businesses and consumers. We'll get an update later on the University of Michigan later this week. So I think that no doubt there are upside risks to this. I think that is the reason why the Fed will push forward with tapering over the next several months, even though we are seeing the emergence of some downside risks around Delta.
I actually want to bring up Bitcoin with you both for a moment because, boy, oh boy, overnight, cryptos had quite the after-hours session, and we saw Bitcoin just a few minutes ago surge above $40,000 for the first time in about 6 weeks. And a big reason why, or at least one of the reasons why, were these reports that Amazon might start to accept Bitcoin this year. Apparently, there is at least one report out there that says Amazon is denying that it's going to start to accept Bitcoin this year. But Sam, I'm going to start with you. Where do you stand on Bitcoin? Is there room in an investor's portfolio for a little bit of Bitcoin?
Well, a little bit, I think so. We do have a buy recommendation on coin itself, which does have exposure to the cryptocurrencies. So far, we've been hearing that the cryptos would end up being a good inflation hedge. I think we'll have to wait and see whether that actually plays out. But with the trend focusing away from your hard currencies, more toward your cryptocurrencies, I think over the long haul, you have to have some exposure to it, at least to force yourself to watch it on a daily basis.
Matthew, we know central banks around the world are paying very close attention to cryptocurrencies, but in the immediate future, we've got to pay attention to that FOMC meeting. We're going to have the report, the statement in 2 days, and we've got Jackson Hole. When you mentioned tapering, do you think they're going to start preparing us for some kind of announcement come November that here it is and here's how it's going to look?
Yeah, so far it's been a very gradual process, almost a hand-holding from the Fed for the markets as we've moved through the process of beginning to talk about taper. Because I think the Fed was still scarred by that taper tantrum back in 2013. For this week, we anticipate that they continue those conversations. They continue to discuss how much progress we're making towards substantial further progress, and that they probably receive a briefing from the staff on the technical details around the pace, timing, and composition of reductions. But ultimately, we expect Chair Powell to stop short of sending a signal that a decision is imminent. We think that the committee wants to see at least one more jobs report, so it'll be until Jackson Hole or the September meeting that we get a clearer signal from them that tapering is likely to commence in November, December. I think the one thing we should note, however, is that we were surprised to the hawkish direction from the June FOMC meeting. And between then, we've gotten another strong inflation print. So there are risks here that the Fed does sound a little bit more hawkish than we anticipate.